Aloha, inspired moneymaker. Thank you for tuning in. If this is your first time with us, welcome. If you're returning, welcome back to Inspired Money, where money meets meaning. I'm your host, Andy Wang. Did I say Wang? I didn't even say my name right. I say that all the time. Andy Wang, AKA Advisor Andy. I always do that because it depends on whether I want to spell my last name or not. But in any case, welcome to the show. Today's episode is a little different, and that's intentional. We're talking about wine, but not as a drink or a hobby. We're looking at wine as a market, one that reflects global trade, pricing discipline, tariffs, confidence, and how capital behaves when conditions get tough. Because luxury markets tend to give us some insight into the economy and some economic perspective, especially when nearly half of all consumer spending in the United States is driven by high-income households, what happens in fine wine can actually teach us a lot about the broader economy. That's why we are focused on Liv-ex. You may not have heard of them because they are a B2B company, but for over 25 years, Liv-ex has been the exchange for fine wine, market data, and insight, where professionals go to price, trade, and analyze wine across more than 47 countries.
People don't define fine wine. A fine wine defines itself by developing a secondary market. A secondary market is a place where buyers and sellers come together to trade an asset, whether it be a commodity, equity, or since 2000, fine wine. For a wine to develop a secondary market, it needs to have brand recognition, usually amongst the trade and critics, and the ability to age. The fine wine market is a relatively small market, estimated to be in the region of $7 billion turnover per annum. Historically, it's had a very low correlation with mainstream financial assets, and for this reason is considered by many to be an alternative investment class.
So it's important to note that the fine wine market moves in cycles like any other market. There have been in the past some quite significant macroeconomic events that have impacted the fine wine market, most notably in the autumn of 2008 with the Lehman Brothers collapse. We saw the market drop roughly 20% in the following 3 months, only to rebound in early 2009 as global banks created stimulus packages to reflate the economy. Trading fine wine is not new. In fact, it's been happening for centuries. However, it's only in the last few decades with the advent of the internet and the birth of Liv-ex that's created a transparent and liquid environment for fine wine to transact efficiently.
The ability to price wine has changed significantly over the years. As you can see from this chart of Lafite 2006, we now collect consistent data from our members to help you price your wine in real time accurately. The price of wine can be influenced by many factors. For example, at the wider level, there is the regional, producer, and chateau. However, there are also other factors such as critical acclaim from the likes of Neil Martin, James Suckling, and William Kelly. The constantly changing nature of the market means that now, more than ever, it is absolutely crucial to have independent and up-to-date price data to help you value your wine.
Liv-ex members have access to the largest pool of data of fine wine prices. This transactional data reflects the real-time trading activity of hundreds of wine businesses worldwide. These prices are completely independent and direct from the fine wine market.
Prices don't stand still. It's important for all involved to be tuned in to market activity through trade, data, and intelligence.
That was a short compilation video that we put together of videos provided by Liv-ex. And our focus today is on the annual Power 100 report, which Liv-ex released last month. It ranks the most influential fine wine brands in the secondary market. It comes after kind of a reset in 2024 and a challenging 2025. And what's fascinating is what the data is starting to show. Early signs of stability, shifting buyer behavior, and a return of confidence. So today, we're using wine as a lens to talk about value, liquidity, global trade, and recovery, and what this market can tell us about where we might be headed in 2026. Before we jump in, I want to take a moment to thank our sponsor, Runnymede Capital Management, my family's fee-only fiduciary investment advisory firm. If you've just started January and you're wondering, am I actually on the right financial path? You're not alone. Most people don't need more headlines or hot takes. There are so many crazy headlines today. They need a clear, personalized plan. And that's what we do at Runnymede Capital Management. Right now, I'm offering Inspired Money listeners a free financial plan and a short, no-pressure call with me. We'll talk through your goals, your questions, and what's really going on in your financial life, whether that be investments, retirement, taxes, whatever's top of mind. No sales pitch, just clarity. So it's very easy to do. Go to inspiredmoney.fm/getplan. You'll answer a few quick questions and schedule a call that works for you. I'm happy to help you make sense of things and start the year with confidence. That's inspiredmoney.fm/getplan. Now let's bring in our guests. We have two guests from Liv-ex today. Joining us is Sophia Gilmour, a market analyst on the market intelligence team at Liv-ex. She works directly with the data that drives the fine wine market, analyzing pricing trends, new releases, liquidity, and the Liv-ex indices to help industry professionals understand what's really happening beneath the surface. She brings together a background in economics, philosophy, and data analysis, along with lifelong exposure to wine. And she's also the author of Liv-ex's Power 100 report, which we'll be diving into today. Sophia, welcome.
Thank you.
Also returning to our show is Robbie Stevens, the head of broking at Liv-ex. On a daily basis, Robbie works directly with the largest fine wine buyers and sellers around the world, helping them navigate liquidity, pricing, and opportunity in real time. With over a decade at Liv-ex and deep experience across global wine markets, Robbie sits at the intersection of data and human behavior, where pricing theory meets real trades. He also regularly shares his perspectives on international stages at events like Vin Expo and the National Association of Wine Retailers, giving him a front row seat to how this market is evolving globally. Today, he'll help us translate the Power 100 data into what's actually happening on the exchange floor. Robbie, welcome back.
Glad to be back. Thanks, Andy.
So it is a weekday here on the East Coast. It's lunchtime. Maybe it's a little bit early for wine, but wherever you are, if you're in the UK, it might be time. Grab a glass of wine and let's get started with segment one.
For years, the fine wine world felt like a Veblen trap, a place where price was a proxy for prestige and gravity seemed optional. But the grueling cycles of 2024 and 2025 delivered a harsh system reset. We watched overzealous estates push release prices into the stratosphere, only to see their secondary market liquidity evaporate. In this downturn, a new luxury currency emerged: consistency. Cheval Blanc ascended to the #1 spot not through aggression, but through a tempered, structured approach to value that rewarded loyal collectors. While icons like Pavie and Angelou saw their rankings slip after price hikes, the market began a flight to integrity. We are witnessing the death of speculative greed and the birth of a more honest pricing code. This isn't just a recovery, it's a restoration of the trust that binds a collector to a chateau.
Sophia, when you look at this year's Power 100, what's the clearest signal that the market stopped rewarding ambition and started rewarding discipline?
Well, when we look at the brands that have performed the best this year, it really is a question of reasonable pricing. Reasonable in the sense that collectors don't feel taken advantage of in any way. While we understand that Bordeaux has had a difficult time itself, producers, it doesn't change the fact that collectors have looked at they've looked at these wines over the past 5 years that they've been collecting and seen their prices fall pretty significantly. And then to be offered those wines again at even higher prices, you start to lose your confidence in the producers. So the brands that have done especially well this year and traded most frequently perform best on price are those that have adopted more structured, less reactive pricing.
When you analyze pricing behavior across brands, is there a metric that best captures this pricing credibility?
It's an interesting question. We tend to look at changes year to year. The price increases between the, let's say, 2020 to 21 Bordeaux vintage were so crazy that, I mean, coming down even for the 23 is really not a viable metric there. So when we do our release analysis now, we take prices relative to the quality of the wine assessed by critics. And we look at whether you can obtain a similar quality wine at a cheaper price. So is there any reason buying this new vintage as opposed to another one that's rated the same with more time in bottle?
Robbie, from the broking desk, when pricing discipline breaks down, what does that actually look like in real conversations with buyers?
I think it often just leads to apathy amongst buyers. People, as Sophia said, lose confidence in the viability of buying today, and putting money down today in order to make some sort of return tomorrow. Now, whether that's a return financially or just not losing out on the opportunity cost of what that money could be better exercised in doing over that period of time. So the challenge around pricing a new release for producers is taking note and taking heed of what's going on in the secondary market in order to inform that. There are plenty of other variables which, of course, they need to think about and have every right to think about. But the performance of prior vintages that are currently circulating on the secondary market is definitely up there with one of the big factors around pricing successfully.
And give us a little context, like how have things looked much differently in 2024, 2025, and right now?
Yeah, so the market, just to I guess explain to the listeners and the viewers, it started a quite aggressive bull run in 2016, largely based off the back of the Brexit vote in the UK, which had impacts geopolitically and primarily on currency. A lot of wine trading is pound denominated, and there's a lot of wine stored in the UK and fine wine stored in the UK. So that overnight, with the devaluation of the pound, had effect across the world with buyers coming in from Europe, Asia, and the US in terms of getting access to effectively cheaper stock than the day prior. That bull run ran until kind of 18, 19 when the market plateaued, and then COVID happened, and the past the first couple of months of the COVID pandemic in early 2020, the fine wine market then began to rocket again. And so between 2020 and 2022, we had another bull market where prices soared really, and that was largely off the back of a lot of people were at home. They had often more disposable income than they had previously because they weren't spending it on holidays and experiences and commuting, and so kind of moving back to that collector mindset and also consumption mindset helped fueled people into buying more wine, and indeed more expensive wine with that disposable income. So 2022 October time was peak market, and things then in the world started to open up. People started to spend money elsewhere, and that detracted from obviously fine wine buying. At the time, also you had further geopolitical tensions, war in Europe, inflation, the cost of money increasing, and therefore people had, there was a kind of cost of living crisis, and so the ability to go and spend money on these things was not necessarily there. Coupled with that, you had rising interest rates, where if there seems to be some sort of correlation between interest rates and fine wine appetite for fine wine. Why put money down on a new release of Bordeaux or Burgundy or Champagne that you're not going to drink for 10 to 15 years, perhaps, when you can get 5 to 8% in the bank through no risk, really. So all of those things over the last 3 years have really seen, caused this downturn that we started to see the back of in October, November time last year. So it was a pretty steady downturn. And yeah, come October, November last year, we started to see an uptick in some of the indices, which is a nice thing to see after 35, 36 months of negative returns in the market.
Interesting. Zero interest rate policy may result in everybody drinking more. Sophia, can you talk a little bit about Cheval Blanc, since it took the #1 spot in 2025?
Yeah, sure. So Cheval Blanc is one of Saint-Emilionn's shining stars. It adopts kind of a stable pricing structure. It's lower volumes than we might expect from other producers in the area. They also own Echem, which featured also amongst the top 10, and adopts a similar pricing structure. Great wine, super high quality, consistent, and makes a real effort to, relate to its buyers.
Robbie, talking about market, when liquidity is thin, is there a market signal that tells you that a brand's pricing discipline is returning, perhaps before the price actually rises?
Yeah, and Sophia can probably touch on this a bit better than I can, but we obviously operate an exchange that has buyers and sellers from across the world, and those buyers and sellers are fine wine businesses, and so being an exchange, those businesses can come and place bids and offers, and therefore expose themselves to the market. We look at the bid offer ratio, so the ratio between the value of the bids on the exchange and the value of the offers, and that can indicate future positive movements or future a change in movements further down the line. Sophia can probably touch on it a bit more.
Yeah, Sophia?
That's exactly right. As soon as we see increases in bid offer ratios, and that tends to be a individual supply demand balance for individual markets and wines. But when we see those ratios start to rise, so value of bids increases relative to the value of offers, it signals increased demand. End of the day, it's behavioral economics, and as soon as demand rises, so do prices.
Interesting that you have those market insights. Let's move on to segment 2.
Imagine a world where the most loyal fans of a region suddenly vanish. That was the reality for Italy in 2025 as the US-Italy trade divorce sent shockwaves through the cellar. With American buyers historically accounting for half of all Chianti and Brunello trade, their retreat, fueled by tariff-driven volatility, left traditional regions fragile and underbid. Yet, in this fractured landscape, a narrative of resilience appeared. San Guido's Sassicaia claimed the #2 silver spot, proving that a globally diverse demand is the ultimate shield against local storms. While 5 major Italian brands fell from the Power 100, the Super Tuscans stood firm, their liquid gold flowing to new horizons. This segment explores the macro fragility of regional dependence and how the 2026 landscape is forcing producers to rewrite their global distribution scripts to survive a world of shifting trade borders.
Robbie, when US buyers stepped back from Italy, How quickly did you feel that shift on the exchange?
Yeah, I mean, US buyers kind of stepped back from everything in April last year, and in fact, kind of from actually 2024, November 24, with the Trump election, that put jitters into the US fine wine market, with the risk and uncertainty around Trump's tariff policy. So in the lead up, between November and obviously April 25, we had successive US buyers further withdrawing themselves from the market, because unlike other markets that might trade electronically and the transfer of the good or the stock is electronic, in fine wine we have to physically move the case of wine. So Liv-ex has a whole part of our business for settlement, and moving cases of wine across the world. And so that obviously impacts lead times and getting wine into the US, as far as getting wine in before those tariffs were imposed. So, from February, March onwards, we started to see a real dip in US buying. And to slightly contextualize from previous years, the US had made up about 35% of buying on Liv-ex in the 3 years leading up to 2025. And so, the final nail in the coffin was, 2nd of April 2025 with the Liberation Day tariffs. And we saw, pretty much all US buying exposure remove overnight. And, the US buyers over-index on buying Italian wine. Italian wine has, and Italy in general obviously has, Italian products have a huge history in the US, and so that has impacted, obviously, that has onward effect into the ability for Italian producers to sell their goods and Italian exporters to sell their wine. So it's had a big impact. We saw the biggest impact between kind of April and August, where that uncertainty was ever present, and there was kind of temporary deals in place. And then when something a bit more final, if you can say that, was established in August, then we saw a much larger return to the market from US buyers. Now, obviously, dealing with 15% tariffs is problematic, and there's a scale of damaging that can be, but most clients, most members on the exchange have managed to deal with it and return to some extent to buying, but it's still hampered. And then news in the last couple of days is obviously hampering it again with that returned uncertainty.
Yes, it's very dynamic, and final is in quotes. So
right, exactly.
Sophia, what does the data tell us about why traditional Italian regions struggled while Super Tuscans held up?
Honestly, I think it's the job that these Super Tuscans have done in marketing globally over the past couple of decades. So when US buyers exited markets, there was still plenty of buyers for Sassicaia, Tignanello, and Ornellaia, but there might not have been as many for these traditional Brunellos, which had initially become so popular with Americans because they were exempt from Trump's initial tariffs way back.
Robbie, how do trade volumes and bid depth change when a dominant player like the US exits? And what does that mean for price discovery?
It's a good question, that actually. Yeah, I think the removal of bids, the way the wine market works, and possibly unlike an equities market, the uncertainty just brings people to take a step back. It doesn't. People aren't adjusting their bids down by X%, and still willing to take on take on some risk, people move into a completely risk-off position and just take a step back. And that's, I guess, a nod to the speed at which the market moves. People don't, they don't necessarily need to keep buying in the short term. So yeah, the impact of obviously the US removal from the market in those months of April through to June, July, August was, there was we saw dips in trade, and Liv-ex is part of the fine wine trading mechanism, but there are fine wine businesses all over the world who are trading with each other one-to-one all day, every day as well. And so the impact wasn't reserved to just Liv-ex, it was reserved to every business in the world that deals with the US or has some part of their supply chain with US buyers involved. As far as price discovery is concerned, a lot of price discovery in the fine wine market is linked not only to what's the market price, so what price can you go and buy this wine at today on the open market. Liv-ex operates real-time transactions, so we enable Liv-ex members to go and see the current bids, the current offers, and most importantly, that last transaction. So what price something's actually trading at. Now, with a depressed market, that data is obviously getting thinner, but it's we're thinner in a very short term. But then once people move past the shock of I'm just going to withdraw, they realize that these are all businesses out there. They've got to do something, and so that's when we then see buying and selling return, but it's obviously at different price points. And that's where the kind of the information and the data really becomes key, because you see that step change one way or the other for people to make buying and selling decisions on.
Sophia, looking ahead, which regions feel most exposed if trade dynamics shift again?
Do you mean if there's another pullback of US buyers?
Yeah, well, I guess it can be interpreted anyway. I mean, it could be US buyers, or it could be some other unforeseen change.
Yeah. Well, I mean, I think discussing the Super Tuscans before, I think they exemplify a good way of hedging your bets against global demand changes. Like really just trying to appeal to a broader market. So higher volumes marketed to everyone, prices low enough that you can, you can budget it in if you would like to, same as champagne. I think it's that kind of middle ground of, let's say, 2K per 12x75, high quality, appeals to serious wine drinkers and also novices. I think those are probably the ones that'll tough it out. So Grand Marque Champagne, Super Tuscans.
I think on top of that, to just add to that, what we've always seen in kind of downward moving markets is, a slight flight to quality, a flight to the blue chip. In the upward moving markets that we've seen over the years, you see the market broaden, people start to look into, emerging regions or emerging grow, or grow, new growers, up and coming growers within certain regions. Whereas, people are reverting back to quality in those downward moving markets. Again, it's a hedge against risk to some degree.
Yeah, I think that this past year it was a reminder, because we hadn't seen tariffs as being as visible for about 100 years. But I think always the buyers and sellers have to be cognizant of trade risks, but also geopolitical ones, right?
Yeah, totally. I mean, does a consumer need to be cognizant of these things? I don't know. It probably depends on what what aspirations they have for their wine cellar. Are they a drinker, a collector, an investor? And those three, you might have one person who is all three of those things. And those three things also might not mean that you always want prices to go up. Collectors probably want to buy wine at a low price, as do drinkers. Investors, of course, want the prices of wine to go up. So there is a bit of a contradiction, I guess, that exists amongst wine buying, but certainly amongst businesses involved in the transaction and the supply chain. An upward moving market is definitely a far more buoyant and happy place to be.
Well said. Let's go to segment 3.
Imagine a world where the most loyal. There is a cleansing of the temple occurring in the hallowed slopes of Burgundy. For a generation, this region was a museum of unobtainable icons, but the 2026 report reveals a fundamental shift in collector psychology. We are moving away from the era of static museum-grade bottles toward wines that demand to be uncorked. The winners now occupy a mid-range sweet spot, labels priced under £2,000 that offer affordable luxury without the speculative fever. While titans like Domaine Laflave remain anchors, the real movement is in the churn. 10 brands fell out this year, replaced by a new guard that prioritizes the dinner table over the auction vault. We're analyzing why collectors are finally hunting for quality they can actually drink, proving that the true value of wine lies in the experience of the pour, not just the logic of the ledger.
Sophia, what changed psychologically for collectors? Why does the £2,000 range suddenly matter so much?
I think on the one hand, it's a shortage of capital. You're forced to think more about the decisions that you're making and why you're making them. We've seen a huge downturn of the market. Everyone has seen their collections fall in price. You kind of don't want to take as much risk maybe in worse market conditions. I think it's, as Robbie said before, it's more cognizance of quality and whether you're getting what you're paying for.
Robbie, are clients actually telling you that they want wines that they can open and drink and not just store?
Yeah, I mean, we're dealing obviously with the businesses, so not necessarily dealing with a consumer who might communicate that type of thing. But yes, I think the top performers within the Burgundy world on the Power 100 over-index towards white Burgundy producers, which traditionally is going to be drunk sooner. There's less risk involved in terms of buying at the right price, I guess, to that degree. I think the other part of it, and looking at the names that have dropped out, they were some of the names that were highly speculated over in that 2020 to 2022 bull run that we saw. But yeah, the ability for people, the ability for people to buy mature wines and wines that are ready for drinking has also impacted things. No longer do you have to buy today, age it, and then drink it in 10 years' time, and that's the only access point that you're going to get to these wines. Today, with transparency of data and actually more professional aging and so on across the trade, people can get access to these wines at a later date. They might pay a slight premium sometimes, they might pay a discount. That's going to be the market forces at play. The reality is, over the last few years, they've been able to obtain these wines at a discount, perhaps to what they were released at. And of course, that it's a self-fulfilling prophecy in terms of why should I buy on release.
Sophia, anything to add on this, on the fact that Burgundy is really showing more churn than any other region in the Power 100 right now?
Not too much to add, except that as a region, I mean, these seriously expensive wines, you incur a huge amount of risk, especially during a downturn. People are very hesitant to buy any of it, which is why you see this kind of flightiness. And the brands that are performing well are kind of that slightly lower range. Yeah.
So you see the primary driver really as controlling one's risk.
I would say so. But I think it also feeds into whether you see wine as a collector's item, something to be drunk, or as an investment. It's not necessarily I don't know, looking at a market that's been down for the past 2 years. Yes, you might be near the floor, and we're now seeing people try and get in, but you don't want to be investing in the middle. So it's also people step out.
Makes sense. Let's move on to segment 4.
When the broader market feels like a storm-tossed sea, capital seeks a safe haven. In 2025, that sanctuary was lined with bubbles. Champagne matched its all-time high in the Power 100, acting as the liquid gold of the investment world. While other regions saw their stories stumble, Krug rose to number 6, anchored by positive price performance and a flight to quality that remains the dominant strategy for 2026. Even in a rocky year, the effervescence of labels like Salon and Salos provided a much-needed respite for the market. Meanwhile, Dom Perignon continues to reign as the volume king, proving that in times of uncertainty, liquidity is king. This segment celebrates the resilience of the cork, exploring how champagne manages to preserve both wealth and optimism when the rest of the world is searching for a floor.
Robbie, why does champagne consistently behave like a safe haven when markets get choppy?
I think, the champagne story goes slightly beyond the day-to-day fine wine buyer, the fine wine consumer. The whole world drinks champagne as a celebratory drink, regardless of whether you would normally spend, that much on another, on a red or a white still wine. So champagne in general as a category has a broader appeal to more people, which means that consumption happens far more regularly than perhaps in other categories. So that, coupled with it, it's obviously a region which is producing a very high quality of wine, and it's got a cohort of very well regarded producers that in a lot of cases are household names, and it's producing in significant quantities on the most part in order, that gives liquidity on the sell side. And as I said, we've got liquidity on the buy side from a much broader market for these things. So all of those things coupled together does make it a far more kind of tradable asset for a lot of people, which in, uncertain times, getting out of something is often as important as getting into it.
Sophia, why has Krug been able to hold value when others slipped?
I'll go back to just that point there and kind of separate out Salon and Salos as slightly different from the Grand Marques and a little bit less liquid, or definitely less liquid. I think the entrances into the Power 100 this year were interesting because you have this region where you have such liquidity. To see investors going back to these much more expensive champagnes is promising. It shows that they're finding a floor, just as to kind of separate out the ones that have liquidity and the ones that are indicative of better confidence in the market. Krug was an all-round great performer. I can't pinpoint anything specific there, except good volumes, high quality.
Yeah. Can you elaborate a little bit more? Like which subsegments really showed the strongest correlation between liquidity and the price stability in your data?
Sorry, could you clarify that? You mean for Ukraine specifically, or for? Oh, you mean across Champagne?
Yeah, across Champagne.
Sure, yeah. So brands like Dom Perignon and Cristal performed exceptionally well in terms of volumes traded. They were pretty stable price performers. Salon and Salos did okay with their price performance, but it was the first time that they had entered into, or maybe not the first time, but the first time in a year or so that they had entered into the Power 100. That's partially thanks to the price per label.
And Robbie, from your seat, how important is liquidity versus prestige when buyers are nervous?
It's a balancing act. I mean, you know, and I think that slightly depends on who the buyer is. You know, as I said before, liquidity allows an easy entry point and an easy exit point, which of course is amenable to nervousness. But the reality is that the fine wine market doesn't move all too quickly. So most people who are coming in, with an investment based mindset, they'd be well advised that they might, be seeking to sit on that stock for 3 to 5, or more years. So, it then becomes a act of timing as to whether you're fortunate or not on these things. But the cycles exist, and at the moment, Champagne has come back to a point at which we were kind of seeing it trade pre-COVID, and during COVID, prices rose 20 to 25%. So as to whether people are looking at it again as a nice safe entry point, Dom Perignon's back at £100 a bottle, $120, $135 a bottle, wholesale. So these are price points that there's a consumer floor, I guess, at which people are happy to pay. Equally, there's a consumer ceiling, I think, which is what we found in 22, that people weren't happy to pay, and they were shying away from buying, whether it's their annual bottle or case or couple of cases of Grand Marque Champagne.
Whether it's wine, champagne, or company stocks, it sounds like it pays to be a long-term investor. Let's bring it home and go to the final segment.
The most profound shift in our latest data isn't a number, it's a feeling. We have moved from the hopelessness of falling floors to a return of agency. In early 2025, the market's only question was, when will the fall end? But by the dawn of 2026, that dejection has transformed into a predatory curiosity. What should I be buying right now? Rising bid-offer ratios have signaled that lower prices are finally appealing to the buy zone hunter. With 3 consecutive months of index growth, the clearing levels have been hit. Investors are no longer victims of volatility. They are the architects of the recovery, identifying profitable opportunities in a market that has finally found its footing. This is our strategic roadmap for the 2026 accumulation phase, where we stop watching the drop and start executing the play.
Sophia, talk about some of the positive data points. Are you convinced that the market shifted from hopelessness to a real return of agency?
Yeah, definitely. I'm prone to making bigger calls, but I think seeing these rises in the bid-offer ratio, that is real. That is a better balance between demand and supply. And I think, honestly, it came off the back of the US market exiting and prices falling in response to that. I think we did hit levels that began to present value to potential buyers.
At what bid offer ratio does the data suggest the market has stopped falling?
So it's different for each of our indices. For the Liv-ex 100, which is an index of kind of the most frequently traded, most influential wines within the secondary market, and then the Liv-ex 1000, which is the broadest measure of the market, we can pin that stabilization point pretty close to 1. And we are very close to approaching that.
Robbie, when did you first notice buyers changing their tone from defensive to more opportunistic?
I think it was probably, August, September last year, where people were starting to get a bit more bullish on these things. For the last 3 years, again, going back to kind of, I guess, how the fine wine market works, you've got either people are buying for stock or people are broking wines straight through to private clients and or their next onward buyer. So those two things have a different risk profile. Now we started to see people taking on and be willing to take on a bit more stock kind of September, October last year. And that's continued to be the case. And so some of those things are a sign either of, a bit more confidence, or it might be a sign of low stock holdings as people work through, back in 22, people got very overstocked in general, especially in Asia, Hong Kong and Singapore, which are the kind of central wine trading hubs over there. The tariff impact in the US is going to, obviously be impactful for the importers and the wholesalers paying and the retailers paying that tariff at the point of bringing it into the country. It will be impactful for the consumers on their check when they buy in a store. But there will come a point that prices will normalize with a tariff involved in them, as the domestically located stock is whittled through. So yeah, I think over the course of 25 we did start to see stock holdings decrease, and that's had a positive impact on people's willingness to buy. But as Sophia mentioned, price is getting to a point that it feels like a no-brainer to more and more people, is obviously confidence providing as well.
Yeah, you had I guess mentioned the challenge of the tariffs and how tariff policies keep changing here in the US. So it's kind of difficult to predict and anticipate. How does a rising bid offer ratio change, really assist your ability to predict price moves a few months ahead?
Well, we've conducted kind of my colleague Alexander Chisholm just finished a research paper assessing the relationship between bid offer ratios and the indices, and it forecasts on different timescales the predicted returns at certain ratios. So there is stats behind it, but yeah, I mean, it makes logical sense anyway. It's not to say that there can't be changes within those ratios. We can't see sudden demand or supply shocks, but generally they follow a trend. Right.
There's useful information content there. Mm-hmm. And then, do you think that this is the recovery broadening, or is it still being led by a small group of trusted names?
I think it's it's probably beginning to broaden. I think there still remains a supply side challenge. You can pick any region in the world more or less, and they have, lots of unsold wine across the last 3 or 4 releases, vintage releases, and until fine wine, buying confidence really returns, until consumption really returns, and possibly an effort from from the people holding that stock, whether it's a producer or whether it's someone, you know, further down in supply chain, to discount that, you know, that stock holding could be a problem. But there's definitely more activity in the market. There's definitely people willing to put bids out there where they weren't previously, and you know, that's starting to be across a wider pool of wines.
Sophia, any final thought?
I think Robbie covered it.
Well, we will end it there then. It was a lot of fun, you know, learning all about the current happenings in wine and wine prices and the different areas and regions. Before we wrap up, I think my biggest takeaway from this conversation is that wine may be something that we drink, but the fine wine market behaves like any other market when trust breaks and then slowly gets rebuilt. What stood out in this year's Power 100 is not just who ranked higher or lower, it's why. After a long reset, buyers aren't chasing stories or prestige. They're rewarding discipline, transparency, and brands that respected their customers through the cycle. That idea, the return of agency, isn't just about wine. It's about what happens after excess in any market. When confidence comes back, it doesn't come back all at once. It tends to come back selectively. So here's one thing you can do this week. Pick one area of your financial life, investments, spending, or even career decisions, and ask yourself this simple question. Am I acting out of habit, or am I exercising real agency? And then make one deliberate choice that reflects discipline instead of momentum. That mindset, whether you're buying wine, stocks, or time, is how long-term value actually gets created. If you enjoyed this episode, please like, subscribe, and share it with someone who enjoys markets and wine drinking, and maybe never thought to look at wine this way. And if you want more conversations like this, where unexpected markets reveal bigger economic truths, let us know in the comments. Let's connect on LinkedIn. Find me by searching for Advisor Andy. Inspired Money is created and produced by me, along with Bradley John Eaglefeather. He's running the live stream behind the scenes. He edits each segment. And Chad Lawrence brings everything together with our graphics, animation, and additional editing. Last but not least, a huge thank you to our incredible guests for sharing their time and insights with us today. Sophia Gilmour, once again, is market analyst on the market intelligence team at Liv-ex. Robbie Stevens is head of broking at Liv-ex. And you can learn more about their work and the broader fine wine market at livex.com. That's liv-ex.com. Also, a special thank you to Grace Geldard, marketing executive at Liv-ex, for helping to coordinate today's episode and providing the wine visuals and assets that helped bring this conversation to life. We really appreciate the Liv-ex team for making this episode possible. Anything that you guys want to plug, or last comment?
Sure. I mean, yeah, yes. If we've actually, well, let's plug our new website. So if people want to learn more about Liv-ex, then we've got a recently relaunched website where you can come and learn a bit more about what we do and how we power the fine wine market.
Perfect. Otherwise, there in the UK, you're end of day. I think you're ready for a glass of wine. So thank you, Inspired Money Maker, for watching and listening. We have another live stream tomorrow, The Future of Work, Adapting to Changing Career Landscapes. Join us at 1 p.m. Eastern. I look forward to seeing you. Until then, that's just a day. Do something that scares you, because that's where the magic happens. Thank you, everyone.